A new article says America's in a fiscal death spiral, and there are only three options: slash spending, crushing taxes, or fire up the money printers. The death spiral, according to Charles Hugh Smith, is a, quote, fiscal meteor that he thinks could lead to financial collapse and social disorder. Smith is echoing Ray Dalio's similar prediction that we are headed for a great disorder as the Ponzi unravels. I have an article on that on the website. Now, whatever form that disorder might take, the fiscal death spiral is the most likely trigger. Why? Because our current trends are out of control. The deficit is the difference between spending and taxes, and it has to be financed somehow. Somebody's got to buy it up. Between rapidly growing spending and a $32 trillion national debt that is compounding, in other words, we're borrowing to service old debt at the highest rates in 20 years, together, these are pushing the deficit so far this year to $700 billion worse than it was last year. But that's only the beginning, because a recession would slash tax revenue. If Americans are making less, they're also paying less in tax. In the dot-com recession, revenue dropped 12%. In the 2008 crisis, it plunged 16%. So that would add yet another $600 to $700 billion to the deficit. Put it together, and we could get to between $2 to $2.5 trillion in deficit. For perspective, that was the entire federal budget in 2008, as in, if the government stopped collecting taxes in 2008, we'd have today's deficit. So who would absorb all that debt? Some would drain from business loans or municipal bonds, which would deepen the recession. Businesses would be starved of investment money, while starving the already struggling cities as well. But most would not be absorbed at all without either spiking interest rates on government bonds to drain everything else, and by the way, compounding the deficits with higher rates, or, of course, the Fed, typing magic trillions and buying up the deficit, which would spike inflation. So which is it? Spending, taxes, or inflation? Washington obviously won't cut spending. It's what they live for. As for taxes, the rich spend hundreds of billions lobbying and accounting their way out of taxes. So they are probably off the menu. As Smith put it, the rich have a political veto. The poor, of course, will get slammed as always. See taxes on booze, cigarettes, or gasoline. But that's only so much juice to squeeze, leaving the last man standing, the middle class, who account for roughly 40% of income. So if they're the tax cow, they get to carry 2.5 times their share. Of course, $2 trillion is a lot of money, so you'd have to roughly double middle class taxes. You'd be looking at 40 or 50% marginal rates. Any politician who proposes that is out of a job, so that is probably not happening. And so we are left with the Fed and their money printers. Now, if they print up the deficit like during COVID, inflation won't take off all at once for two reasons. First, recessions lower prices as unsold goods pile up and energy prices plunge. Second, financial panics are inherently deflationary. When savings vehicles like bonds or loans evaporate, they default, dollars are taking out of circulation to plug the hole. Still, whatever inflation does in the near term, we are locked into an inflationary death spiral. They will kick the can as long as they can, then they'll squeeze the middle class until they get angry, and then this fiscal spiral ends the way they all do, printing eye-watering quantities of money. Okay, we'll be watching. See you next time.